in his strongest defense of the Urjit Patel recommendations on pegging monetary policy to CPI inflation versus WPI, well, RBI Governor Raghuram Rajan has said that retail inflation needs to be brought down for sustainable growth. He also says that while it's the prerogative of the government to set the inflation target, policy tweaking should be left with the central bank. Anirudh Ghosh joins us with more details on this. Anirudh, what does this particular statement mean from the RBI? Because there has been already a lot of debate between WPI, CPI and the Urjit Patel committee report.
Yes, remember that the Urjit Patel committee report hasn't very formally been accepted by the RBI yet. It's still open, in fact, for the public commentary, and of course it's only after that that the Parliament is supposed to, in consultation with the RBI, actually formalize the Urjit Patel committee recommendations. But then remember again that in the last policy statement they did very clearly say that they have adopted a few of the recommendations that the Patel committee had put up, and the main recommendation, which of course does affect almost every stakeholder in the entire economy, is basically the fact that they want to bring down inflation to 8% in the medium term, and shortly kind of glide it down to about 6% by the shorter medium term. So clearly the intention is to ensure that CPI inflation remains a peg for inflation, and of course Dr. Rajan has said that even though it hasn't taken into account all of the recommendations of the Patel committee, this is clearly one recommendation which they are very keen on implementing going forward. So clearly they've said that it is at the end of the day the prerogative of the government to ensure that there is a peg on the inflationary environment, and of course that there is a monetary peg that is which is set by the government. But then of course it is going to be up to the RBI thereafter to ensure that that peg is followed and that those objectives are finally achieved. So basically the way that they go about setting monetary policy is something that Rajan wants to be left completely to the RBI, and of course that will include the pace of monetary tightening or easing, and also of course all the kind of tools that they will finally use for that kind of policy tweaking. So of course that is a very key statement coming out from the RBI. Also keep in mind the fact that he said in today's statement that he really wants to bring down inflation to that level, and that at this point of time bringing inflation down to a sustainable level is possibly the only key to ensuring that growth remains key. He's also made a couple of very interesting statements. One, of course, keeping in mind the fact that even if the RBI does go ahead and indeed cut rates, it doesn't necessarily mean that that other banks are going to actually follow that up with deposit and lending rate cuts of their own, for the simple reason that inflation is high at this point of time, and that basically means that depositors are looking for a higher yield than the inflation rate. So that's basically the reason why deposit rates are high, and in turn the lending rates are high. So clearly the message is very clear from the RBI governor that interest rates are going to possibly remain high till inflation does come down in the medium term.
Of course, inflation taming has been the big task with the RBI. Thanks, Anirudh, for getting us all that perspective.